Welcome, everyone, to another edition of Back and Forth with Becker Orr. We're going to have a lot of fun today. Lots of topics to tackle. Kevin and I are going to get into it. We'll start off with a big one. We're going to start off with, is the correction over? We had a bump at the end of January. Is that it? You can see all the other topics at the bottom there. So there'll be quite a bit for us to talk about here, Kevin.
Yeah, please. You know what? This video, there's a variety of other videos we got. Like, subscribe to our YouTube channel. Find us on Facebook. We're happy to see you whenever you come in.
Absolutely. So let's dive into that very first topic. Is the correction over? You can see on the screen here, this is the Canadian stock market, the S&P TSX. We're at record levels in January, and then a bump at the end of January in the mix of all that mania with GameStop and the other stocks of almost a 4% drop, but it was short-lived, Kevin. We're right back to all-time highs in a matter of days in February. Was that it? Is it over?
No, I don't know that it is. And I can't say that for sure, though, right? I mean, here it is. It took a month for us basically to lose the 4%. We thought this might be continuing going forward. And it took a week to gain all of that back. And again, is there anything that really changed? I don't think so. I think, we've had some of the aspects would be we've got positive numbers that came out of the United States for earnings. I mean, it's the first time we've actually been on the positive side since 2019. After everything that happened disaster-wise with the coronavirus, we're starting to see some things from there. But, volatility is there. The VIX is still at a high. So I think there may be some bumpiness. What are you thinking?
Absolutely. That VIX, which you mentioned, which is the volatility index, lots of calculations going into how they actually do that. But when it's higher, that means things jump around quite a bit. And it's still at an elevated level. It's still above 20. It's just the volatility was on the upside up until the end of January. And it's still there. We're still getting that. Now, granted, all the little mini manias and the pockets of froth we've seen probably influence that to some degree, but I'm in the same camp as you. We'll probably have a few more bumps and bruises before this is over. I don't think it'll be a disaster crash like we had back in March of 2020, but little 4% blip at the end of January, that's likely not it. Do you think a month or two, or hard to say, right, when it's going to happen?
It's something that we can't continue to control, right? I mean, you've seen how fast things react when it goes up and how fast when they go down. I mean, theoretically, it's still the same thing. Vaccines coming out, will it get out there faster? Fear of missing out, and U.S. stimulus and things along those lines. But yeah,
you hit the nail on the head there. The fear of missing out. The fear of missing out has been all over the news recently because it relates to GameStop, it relates to Cost, to AMC, BlackBerry. All these companies just had this huge spike, and folks are sitting there watching, saying, "Ooh, I got to jump in and get some of that action." And we talked about this in another video, and I'm going to pull up a slide here, Kevin. We kind of knew how it would end. I think last week, you can see the numbers there, the left column. This is from Charlie Biello. And he looked at all the hot companies and what happened to their shares last week. Are you surprised by these numbers, by these big losses?
No, not at all. I think that this is something that we were going to be seeing. As we know, they bet on companies that really didn't deserve to be anywhere near they were. I mean, the Robin Hoods, the Reddits of the world all got together and said, you know what, we're going to try and screw the hedge fund guys and let's see what goes on. So we'll bid these up and see what happens. But they were never really in that position where they were great companies to begin with. As your chart shows, I mean, they're down 80 to 90%, a lot of these things. Just taking a look at it. And on the GameStop side of things, how do you go from 1.2 billion to 35 billion basically overnight? I mean, it doesn't make any sense. So yeah, this had to come down. And is it finished yet? It might not be. I still think that they're very high valuations compared to where they should be. So I think that there's still a little more down room for some of these. But what do you think the mini mania market's going to be like? Is it going to continue?
Yeah, it'll continue. I'm sure it'll continue. Folks still have access to Reddit. They still have the Robinhood accounts amongst all the other brokerages, and there's still free trading on these platforms. So it'll just pop up somewhere else. I don't think it's over. It could just pop up somewhere else. But that second chart, the right-hand column, you can see GameStop's valuation. It went from 1.2 billion all the way up to 35 billion, and then right back down to 4 billion. It's craziness. It's craziness. Companies don't jump around the valuations like, especially when nothing happened. It's not like they came up with a new product or announced a new exciting deal. It's the exact same company. The valuation just spiked and then proceeded to crash. So
yeah, you'll notice that the one big company that didn't go down quite as much is Canadian. The one right on the bottom there. It just proves that we can hold up a little better than some of these U.S. companies, right? BlackBerry's still only off 40% from where its high was. Which
when minus 40 is holding on, you know you're in a mania. When minus 40 is, they're holding their own there.
That's perfect. But yeah, I mean, some of this has to deal with a variety of different odds and ends that are going on. I mean, one thing that's been a big topic right now has been the U.S. stimulus package. Now, of course, this has been going on since basically Biden got elected and knew he would come in. But I mean, it's a $1.9 trillion scenario. Now, I know that they're looking to do it on a bipartisan basis, But
Yeah.
I mean, there's the rumor there that if they don't do it, they're going to shove it through just as it is because they've got the extra vote with Kamala Harris, being able to say, yep, we're going to pass this through. What do you think the stimulus package is going to look like by the end? Is it going to be 1.9 trillion? Are we going to see something different?
It could be 1.9 trillion. I think there's a low probability of that just because of some of the pushback they're getting on a couple of those items. They have such a low majority. They don't have a lot of votes to lose. So if one Democrat in the Senate, for example, says, hey, I don't like that item, the deal doesn't go through. And we're seeing some of that already. They had in that stimulus package, they did have a minimum wage of a federal minimum wage of $15. Mm-hmm. We're seeing some pushback amongst Democrats for that. So maybe that one doesn't pass the bill. We'll have to see. But some stimulus likely will get through. The final package, we'll have to wait and see. The bigger question, though, for markets, for investors, are they going to care? Is this already priced in, or do you think it'll have an impact?
No, I think it's already priced in, as you've mentioned. I mean, they know they're getting something, whether it's the 1.9, whether it's 1.5. I mean, as long as it doesn't revert to something along the lines of, well, we're going to give you $500 billion as opposed to anywhere near this, I think that they're going to be safe going forward, and it's not going to have any impact on the market. They've already stated that one stipulation is the $1,400 checks are going through. That's going to be passed by every Democrat plus. So, and as you mentioned, the $15 wage thing is a bit of a problem. I mean, the Congressional Budget Office just came out and said, well, if you go there, you may lose 1.4 million jobs just based on the way things are going. So, I mean, it's all over the map with that, but this is already priced in, just like the vaccine's been priced in. I don't see it being a big article for the markets going forward at all. Any more comments?
Yeah, well, quickly here, you can comment if you're watching on Facebook or YouTube. You can write in the comment section. We'll see it. I'm going to pull one up here for Kevin. A little bit of positive news. Go Clinton and Kevin. Full disclosure, that is my wife, so she might be a little biased, but we appreciate
Don't mention that.
Absolutely. Well, let's move on to the next topic here. Your favorite, Kevin. You're a big sports guy. I know you love Tom Brady, so I did this one specifically for you. The biggest Brady fan gets ring number 7 on Sunday.
Oh, if there was one thing I didn't want to see this year, it was Tom Brady claiming a 7th Super Bowl. Anything but that. I still have problems with a few of the other ones he's won. But, I mean, I got to admit, the Tampa Bay Buccaneers looked like the dominant team. They looked like somebody who should be winning the Super Bowl. Their defense came prepared to play. Their offense picked it up when they needed to. They ran the ball when they should. The passes were short over the middle. They did a lot of good things, and they got to the end zone. Now, questionable calls, I will say, in the first half may have led to some of this, but as much as I'm not a fan of the man, he did play a good game. Did you watch most of this, or?
I saw bits and pieces of it. I watched most of the game. Now, I don't want to take anything away from him. Obviously, he's won 7 Super Bowls. He's doing something right. But I think the big story here was the Tampa defense. They're able to hold Mahomes and the Chiefs to pretty much no offense at all. Three field goals. That was it. Now, yes, the offense and Brady had to go out there and put points on the board, and they did that. You're right. There was a few questionable calls, but full credit to the Tampa defense. Like that to me is the story of the game. Maintaining the offense was very tough, and they managed to shut them down almost completely.
Yeah, and there was very limited pressure after the first few series on Brady. So, I mean, it made it a lot easier for him to be able to control the ball. But, yeah, Patrick Mahomes, I mean, Kansas City unfortunately lost their left tackle before the game. So lots of changing on that front line, and they just couldn't hold the front four. They didn't need anything else. So, you know, as much as it was interesting to watch, I mean, they're already betting that these two teams are the favorites for next year already on the Vegas odds. So being a Washington football team fan, I'm not happy to hear any of that one. But we'll have to see when the season starts, roughly, 6 months or 8 months down the road from where we are at this point.
Exactly. And leave it to Vegas. The second one thing's over, they have the next item for you to bet on. There's no shortcuts there, no waiting time. But with that, let's get into the question of the week here. We try to do one every week, something topical, something that could help folks out. And I wrote this one down. I know we're getting to tax season. In 2020, it was a very odd year for a multitude of reasons. But as we get into tax season here, Kevin, is there anything people should know, any little tips we can provide for the 2020 return?
Yeah, I mean, one of the things is what you were forced to do with COVID was work at home. And being a person who could work from home, you are now allowed to claim some of being able to work from home expense-wise, because, not being into the office and doing a few of these odds and ends. So, what they're basically doing is the government's giving you, depending on what the criteria are. Now, I believe it's 50% of the time you had to work at home for 4 weeks consecutive to be able to claim this thing. And it's basically $2 a day up to $400 a day you can use for expenses, something along those lines. You probably have more to clarify on this.
Yeah, I printed it off here. This is from CRA from the website, so you can definitely get the full details online if you'd like. But you're correct. You have to have been at home for a period of 4 weeks, and for 50% of that time you work from your home. That's the first qualifier. You have that in the bank, then any other day you work from home can qualify for the credit as well. They use this new flat rate. The flat rate is $2 a day, so if you have 200 days from home, that gets you to the cap. The cap is $400, and they do have a few forms that you have to fill in. They have a Form T2200S or just the regular Form T2200. Your accountants would know all about that, but certainly that's something to look for as you head into this tax season. That's a new rule, one that they came up with because of the pandemic, because people were working from home, a little bit of extra money you can get off your tax return.
Yeah, and I mean, basically, we know that this is going to happen for this year. I do not know if this has been fomented to go forward forever. I mean, as we start to come out of the pandemic, I mean, it's one of those ones where, last year we could do taxes all the way up till September before we had to worry about paying any interest if we didn't claim by that point in time. So it may not be written in stone that this will happen for you every year, but, if you can take advantage of it for the 2020 tax season, why not?
Absolutely. And before we go here, a reminder, everyone, you can visit our website. Specifically, if you want to get a hold of us, we have a special part of our website, chatwithclintonkevin.com. You can fill in the form, ask a question, maybe suggest a topic, whatever it is, chatwithclintonkevin.com. Any final words, Kevin?
No, I think everything's been covered for today. I mean, we've touched on a whole bunch of different bases, and more videos can be found at our website. Also, you can look at us on YouTube and on Facebook. Please check us out. We love doing this every week, so we'll be back to see you soon.
Take care.